All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar, so let's get through our charts here. The euro, by the way, is trading, was just trading at new highs anyway. Man, my eyesight feels horrible this morning just because I'm, just the lack of sleep or the very tough sleep that I had last night. Okay, so here we are. We're right up against resistance. You notice the previous high over here was 17 or 113.76, so 113.80. We just hit highs of 113.87. So we rallied right up towards resistance. You also have to imagine that we can go further than this. I mean, this is a, as far as I'm concerned, this is a, breakout, unless we slip back below this breakout point, which I'm going to write down, which is 1340 basically. So support today right now is 113.40. Okay, below that, I think we probably just have to write 113 down because that's what we had yesterday, right? It's right here, 113. So I'm going to write down both because I think it's both important. 1.1300. Okay, so 113 and 113.40, both pretty key supports. Now, as far as resistance goes, I mean, because we're at resistance right now. I mean, there's no if and or buts about it. But let's imagine that this, the end of quarter flows continue to drive the euro a little bit higher from where we're at. Okay, 114 is 127% extension. 114.70 is the 161% extension. We've got to make the assumption that we can make it up there. So resistance would be at 114 and 114.70 in case the rally continues. All right. Depending on today, well, I still think we're in a big range. I mean, I'm like, I mean, it may be moving up here, but we're also facing a lot of other really key resistance, up here at the upper 114s too. So, it's not like, if you're long the euro dollar, you're out of the woods here, or it's going to 120. I think you guys probably thought I was smoking crack when we were down here at at the 108 to 110 level, pre-FOMC and pre-ECB meeting, and I said the euro can go to 115. And I think most of you were like, yeah, the euro can't go to 115. Here we're on our way. All right. The question is, how we act from here. This is all going to be super important. Super important for the market. Over the course of the next couple of, probably over today, really. All right. Let's go over to the cable. So the pound, you can see the pound's having some hesitation here. Now, we had a reversal candle yesterday, FYI, okay? If we had a reversal candle yesterday, which we did, right at resistance, that means that you want to use this current rally as an opportunity to sell, right? Now, I'm short the cable. I'm still short the pound. My cost average is 114.04, right? Or 144.04. Sorry, not 114.04. The 786 comes in right here at 144.30. You guys, if you're looking at the cable right now, you might start looking at it as an opportunity to sell. Like if you want to short it where it's currently at, put your stops above, 144, whatever this is, 144.60, maybe 144.80 or so. You could do that because that's your risk. All right. Or you can try to see if it'll make its way any higher. I am going to write down that key resistance is 144.60. I believe it's the neckline of the inverted head and shoulder pattern. So 144.60. Okay, that's going to be key resistance. We are still in a range. All right, support. We dropped all the way down to 143.25, right? Let's see something. 143 was a fib, but okay. That 143 and a quarter is going to be pretty important support, but let me double check something else. See, 143 is the 38% retracement. We didn't quite make it. So this support here is going to be really critical on the way back down. If we come lower, I mean, if we go down, yeah, I'm giving you the if, because who knows, maybe the dollar does continue to get, continues to get hit. So 143 and a quarter. All right, let's go over to the Swissy. So I bought the Swissy down here yesterday. I bought the Swissy at 96.05. I added a little bit to it just this morning, and I have a cost average of 96.10. Okay, Swissy's back under pressure. It's come under actually a lot of pressure with the euro as strong as it is. But you guys know this is like the area I've been wanting to buy the Swissy. I've been wanting to buy it here for quite some time. I'm looking for, a move down to 95.50, which would be a 618. Also, in case we do get down there, there's a 161% extension down there, just so you know. Okay. Take this low to this high. The 161% extension also comes in at 95.65. So I'm going to write down 95.65, and if you get an opportunity to buy down there today, got to take advantage of it. Okay, that's going to be really, really critical support if we can get down there. It's not a guarantee; it's an if. Like if we can get there, you got to take advantage of that. All right, resistance for the Swissy is right. Look where it stopped. I mean, this is very simple technical analysis now. That's not one. All right, let me zoom in. Okay, previous support, current resistance. So the highs here are 96.60. So that's going to be really important. Resistance on the way up. Well, that's going to be good resistance on the way up. We are in a longer term range, as you all know. Longer term range. We're at a lot of support. This is the 618 from the place where we can measure. We can't measure from down here. You all know we can't. We can't because my numbers and your numbers are different. Yours might be over here, mine might be over here. Yours, your brokers are all going to be different. So that number we can measure. So that's the 618, comes right in at that trend line retest. This is a multi-decade trend line retest, by the way. All right. Ooh, the dollar yen's coming under pressure. Please continue under pressure. Thank you very much. Hold on really quick. Let me see something. Okay. We'll get to the yen here in just a second. So there's a Swissy. Okay, let's go to the yen. So the yen. Here's the thing. Okay, I know the dollar yen's probably down because it's dollar related. I get it. I understand. The dollar's weak. The dollar yen's going to be weak too. But the thing that makes the dollar yen so vulnerable right now is that the S&P has been so ungodly strong. Okay, so when you look at the S&P, you go, wow, okay, this is what. Let's go over to a daily chart. You can see that's what the S&P futures have done. This is what the dollar yen has done. If the S&P starts to turn lower, which I think it will, around these levels somewhere here, whether it's today, at the end of month, or whatever. If it starts to turn lower and the S&P starts to turn lower, the dollar yen's going to really get clobbered, in my opinion. Okay, this is where my dollar shorts are at. They're hedged a lot of my dollar longs that I've got currently because, you know, I've been short the dollar yen for quite some time. A move below 112, in my opinion. I know I have this line drawn right here because you can see all those wicks. Okay, here, let me undo that with the S&P. So I know we have all these this long wick right here. We have all these little wicks. We have our 50% retracement, which we're basically sitting on. But 112, since that's a spike low, that's probably going to be support. Because if we break 112, then I think that it's really signaling to you that the dollar yen's going to come down pretty aggressively. Wow, the euro is so strong. Euro's at 113.90 or close to. Resistance for the dollar yen, which even with dollar strength, this thing can't even move. I mean, that's it's pretty amazing how even when dollar strengthened yesterday, this thing can't even get a leg up. Okay, so 112.65. Because I could say, well, maybe it's not all dollar, you know, but you know, looking at the oops, this is bearish. Looking at the dollar yen, you know, like I said, when there's dollar strength, the dollar yen doesn't even respond. No response. Dollar Canadian. Okay, so we have Canadian GDP today. Canadian GDP is coming in a little bit later, 0.3% for the month is what the market's looking at. We had a spike low yesterday. And there's obviously a lot of support down here, 129.20. I mean, we're basically on it right now, but you have to really mark the lows from yesterday, which are 129.11. Obviously, if the 1.2911. If oh, I have to look at something else too. If the Canadian, you know, GDP comes a little bit stronger month over month, I mean, we could obviously break through that, but there's something else we should look at with this Canadian. Okay, this is the 618 retracement. If you look at the May lows of last year, May 2015, to the spike high, we're at the 618, depending on how your, you know, where your highs are at, because it depends on your broker. Your highs might be here, but it's right around here. Okay, it's very close because we have a high of 146.89. Let me see where like TradingView has a high. Same price at 146.89. So that 618 is at basically 129.78. Now, obviously, we're below it right now, but you're looking at a weekly or daily chart like this. I mean, we can be, you can see just like last time, you can be above or below that, you know, on both sides of it pretty easily. All right. So it's going to be important, especially if we can turn from here and we can turn higher. You know, weaker Canadian GDP would obviously send a little higher. Crude oil is bouncing, which is also keeping the Canadian pretty bit at the moment. You know, with on top of that, you got this dollar, you know, dollar weakness across the board. So, so anyway, dollar Canadian, a lot of support down here. The 618 is right there, close to it. So resistance. $130.10. It is bearish. Now I'm gonna tell you it's bearish, even though I'm long some dollar Canadian. It's bearish while we're below this. Let me make sure I had removed it yesterday because we were doing some drawing, but let's just go ahead and put it back up here. I'm counter trend right now. That's why my position's not big. But yeah, while we're below this yellow line, it's it's bearish. The euro is at 113.91, by the way, still hitting highs on the day. Right. So as long as we remain below that trend line, it's bearish. We get back above it, that's going to start a squeeze in the Canadian. All right, so we have it a bearish. Let's go take a look at the Kiwi. So the Kiwi grinding higher. Its highs yesterday were at, as the AB equals CD. Now the Kiwi in Asian trade tried to dip below 69 cents, you know, but it's basically holding. The highs yesterday were at 65, right? 69.65 basically. If we go up a little bit further, it's 69.70. This channel, I'm looking at the channel. We can make one more stab up there. 0.6970. All right. And you know, we held, so we're going to keep it we're going to keep it bullish, okay? Because we still held above 69 cents. You know, it looked vulnerable yesterday, but it still really held the breakout point. So the low today is going to be really important, 68.80. That's going to be really important support for bulls, because in order for us to stay bullish, it has to hold above that. All right, let's take a look at the Aussie. Let's do that one really quick. Another updated Brexit poll. The stay is 51%, 49% leave. Yeah, it's still really close. You would think the pound would get a little bit more of a lift than on that news, but again, this is end of month, end of quarter movements, so can't read too far into it. Okay, so here's the Aussie. Yesterday, we pressed right up into these highs, and it looks like we're trying to do it again. It's still just hovering around this daily 618. I know you can say, well, we're above it, Blake. We are, but you know, you noticed yesterday's close with that long wick. Today's it's kind of the same. It's like we're rallying. Yeah, it's rallying, but it's still very early in the session. We get another failure up here, and that's not gonna look good for the Aussie. What we will do is we'll figure out what the 127% extension of this is, though. Okay. This last move lower, that should be resistance, which will be 77.35. Because it's like the Aussie, it feels like the Aussie's, drudgingly moving higher. It's not like free flowing, it's just being dragged higher. But we are still bullish here on the Aussie, just being very careful with it. Support, probably have to just take the overnight lows, but let's check something. Yeah, I mean, the lows is 76.34. I'm going to write that down as it's going to be the overnight low, so 76.35. That's the overnight low, basically. That's support. All right, guys, when I come back, we will continue on with the dollar index, and we'll look at the peso, which is pushing lower right now. We'll look at the peso. We'll look at the Nordic currencies. Don't go anywhere. Be right back. Hey, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to welcome you all back. So the euro continues to hold up pretty well. This is, just like, like I said, a lot of end of month, end of quarter flows driving the euro higher. It's holding up really well. The cable, not so much. If you put two and two together, most of the flows right now are obviously euro denominated and dollar denominated. A lot of dollar selling coming in quarter end, a lot of euro buying coming in quarter end, and the pound. Obviously there's pound selling quarter end too, and relative to the euro, because you got the euro pound that's extremely strong at the moment. We're pushing up into the wedge resistance here. Okay. You can see it's just kind of wedging higher. So a lot of strong flows coming through the market. The Aussie and the Kiwi, I think, and the Canadian are just kind of being pushed around. There's some strong Swiss buying coming in as well. Hold on. The Swiss is challenging basically the support where it was yesterday, or the prices it was yesterday. And it looks like the yen's not getting much of a move here. Hold on really quick, stand by. Okay, let's go ahead and take a look at, let's go into the US dollar Mexican peso, because the peso, still coming under pressure. I was drawing this out yesterday. I was like, man, is that a descending wedge? Which it very well could be. We just probed stops below yesterday's lows, and who knows if this is going to hold or not. But like I said, I had to widen my stops a little bit because of these end of month flows. I just don't want to be stuck, doing the same thing that I did yesterday. You hit brief new lows and then it bounces. Okay. Let's figure out where the 127% extension of this last move is, because that's where more formidable support is going to be. 1710. Oops, shit, I forgot the dollar index. Hold on. I'll have to go back to that. 1710, should we get down there? And then resistance, obviously, we'll just take the overnight highs, because this will be significant. Right there, right? So all those hourly spike highs, 1720. Just to be safe, 1730, right? Okay. 0.300. Okay. And we're range bound, but we're threatening to go bearish. Depending on how today. So especially if the euro continues to break out, then we'll have really no choice. Let's go over to the dollar index. Here's the dollar index coming under pressure. We're breaking yesterday's lows. Okay. Obviously, our resistance held very well yesterday on the bounce up, so that's going to be extremely important for today. 95.05. That's going to be really important now because it already proved itself. Let's go over to the hourly. Let's see what 127% extension gives us on the hourly. Relative strength is diverging pretty bad too. Flows. We are at the 127% extension right now. All right, let's just make the assumption that we go down to the 161% extension. We have to make that assumption, but we are at 127% extension of yesterday's move right now. You can see it right here. Okay. So 161% extension comes in at 94.30. I'm going to keep it in range because, because we're heading down to the lower end of our range. Oops. Okay, here's the weekly chart. Lower end of our range. So, you may be, running a little bearish, but, right now, but we're still in a much bigger, longer term range environment. All right, let's go to the Nordic currencies. Here's the US dollar, Norwegian krona. We're attempting to break lower here too. This has that big head and shoulder pattern, but man, it's been choppy. This has not been a one-way street, that's for sure. It's been anything but. If this is a big head and shoulder pattern, which it very well could be. Okay, right. Here, let's get rid of this for now. Let's get rid of this for now. If the euro ends up breaking out, okay, so let's say the euro ends up the day. Let's just imagine the euro ends the day above 114. I think you have to be a seller of the US dollar Norwegian krona, especially if crude oil is strong. Now, but again, it's really tough to make those calls like right now. Knowing that it's end of month and knowing that everything's just being pushed right to supports, breaking just a brief new low here. It's hard to get too super bearish at this moment. Let's keep it on our radar because I don't see any real support down here. 823 I guess isn't too far away, but it's like I really think we need to get through this afternoon before passing too much judgment on these. Here's the US dollar Swedish krona. The US dollar Swedish krona is driving lower. Same thing, but we're also heading towards really key support. I mean, it's hard to get really bearish down here. If you got bearish down here, you got killed. You got bearish down here, you got killed. You got bearish down here, you got killed. You get bearish down here, you get killed. I mean, it's just, it's so here we are back at, really strong support. Does it really make sense to get aggressively bearish down here? I don't know. I think it's a little dangerous. Stand by. Okay. All right. So here's your bias chart. I'm going to leave it up like that for now. I wanted to take a look at the South African rand. Catherine.